Excellent. Thank you so much, Daryl. I appreciate it and always enjoy your intros. It's great to hear from you. I think I'm way overdue for a visit, but at the very least, hearing from you is great. But good evening, everyone else. Thank you for being here this evening. I always enjoy kicking off these sessions where if you can hear me okay and see the voodoo lines, finding hidden support and resistance in the market, reply by letting me know where you're joining from. We've got a little bit smaller crowd tonight, so I'll be able to spend a little bit more time with questions or just kind of getting to know you guys that are here with us. And I'm always fascinated how trading will bring together people from all over the world, trying to accomplish the same thing. A lot of US so far, usually pretty expected, especially given the time of day. Costa Rica, that's a good place to be starting your trading sessions. San Diego, thank you for joining us. We are coming to you live from the thriving metropolis of Leander, Texas, just slightly north of Austin. Vail, Colorado, another place I'm probably due for a trip. Sacramento, Chile. Awesome, Henry. Gotta appreciate somebody with the same moniker. But thank you guys so much for being here. Thank you for running through the sound and video check. I want to get into this, and we'll just kind of go ahead and kick things off. Hello, and welcome to tonight's webinar. My name is Henry Gamble, and I'd like to thank you for being here and taking the time to learn about something that can add a formidable edge to your trading. I've been trading for 13 years, and I've been very fortunate to have several excellent mentors along the way. One of the most helpful is tonight's guest, David Starr, the creator of the Voodoo Lines. What are the Voodoo Lines? The most basic definition of the Voodoo Lines would be a technical indicator that automatically plots support and resistance on a chart. That's one of my favorite things about the Voodoo Lines, as support and resistance is a very simple concept. Most traders are familiar with what trading support and resistance, and on its most basic level, that is what Voodoo Lines provide. The magic of the Voodoo Lines is the varying degrees of importance given to the different levels of support and resistance. Flying blind. This is my life before the Voodoo Lines. First, we're going to look at a chart without this life-saving indicator. Lulu began consolidating at the end of June, the beginning of July, and one might expect that the next move would be a trend-following move higher. So the point that I'm discussing is kind of right through here where you can see the consolidation. This begins at the end of June, kind of beginning of July. And when I note that you could assume that the next move might be higher, it's really coming from the trend that led us here. So you have a very nice bullish move. You move into this sideways kind of trade. You might assume that the next move is going to be a leg higher. However, you probably wouldn't have assumed, or you wouldn't have known, that $400 was going to be the perfect target and that you might be able to maximize the majority of the move from 300. Almost like X-ray vision, this is life with the Voodoo Lines. Fire lines, snow lines, and tree lines are key components of the Voodoo Lines and play a vital role in the creation of my trading roadmap. So now we see an entirely new perspective where this period of consolidation gave us what was going to be the ultimate target right here at $400. These levels are mapped ahead of time, and we knew that, given the confluence of other signals that we had, that there was a high probability that this is where we were going to be headed. One of the two trades shown here, the longer duration, the $300 call, is my favorite. We're in on July 17th and then out on August 20th, while our Delta 65 options more than double. So this is a kind of style that I really enjoy trading off of daily squeezes. And you can see here where we're picking up that $300 call for about 32 bucks. And then about a month later, we're able to flip that for twice those gains. That's one of my favorite types of swing tradings for a number of reasons. But the Voodoo Lines give me an edge that I've yet to come close to by any other means. I manage two primary portfolios, one through Thinkorswim and one through Tastyworks. Thinkorswim is usually focused on one-lot trades and generating the best returns that I can, risking no more than 3% on a single idea. In Tastyworks, I'll trade more of a loose, aggressive style and try to push myself to the point of a comfortable edge. I show you this only to show you that there's a trading room, kind of new trader kind of perspective that I pursue when suggesting trades. Then there's the other perspective where I really do leverage the edge that the Voodoo lines offer. So, showing you this setup and showing you the conviction I had behind it, it ended up being one of the better trades of this year. And that's the type of confidence that I've been able to have in these Voodoo lines after, spending some real dedicated time devoted to their study. Another couple of things we're going to look at. You ever feel like you were in a trade that was just stuck? Not only do Voodoo lines provide great targets, they also suggest areas where a product may be due for consolidation rather than trend continuation. The current daily squeeze in Restoration Hardware has been one of the most difficult in recent memory. I enjoy sharing this work with you because any student that has studied under John for any length of time will be able to take the Voodoo lines and seamlessly integrate them into the studies that they have already done. That is to say that I have grown up on the squeeze, right? It's the foundational signal that I've based my career off of and that I've really tried to study ever since I met John. You can see in this example where we had 3, maybe 4 instances of strength where Restoration Hardware has tried to break out on the back of a squeeze firing long, but it just couldn't get through resistance. You have the squeeze that fires long here, and you get the move basically off of earnings. But then when it starts to become, this is where I'd be looking at it again. And I would say, great, I've got a 2x move on earnings. I've got consolidation that has led us to this point. The daily squeeze should carry us into higher prices, yet we can't get through it. We sit here and we continue to beat our head against what seems to be kind of this invisible wall of resistance. As soon as I apply the Voodoo lines, now I can see a clear and obvious area of resistance, and it's not just any old resistance. This is a fire line. The fire line is the most significant area of support or resistance for any stock and most always provides a pause to any move into these levels. So now you can see how I have a more defined picture of what I'm working to pursue. So while I'm sitting here working on trying to get this, this compression signal to eventually resolve in the direction of trend, rather than being frustrated about its lack of performance, I can look at it with more of an even view, knowing that this should be a very important area to pause. Let's look at another example of how Voodoo lines create a roadmap for my trading. The end of day 15-minute squeeze is one of my favorite overnight signals. It's a compression signal that doesn't resolve during the cash session that it's created in, during the, any given day when the signal forms. If you still have that signal at the end of the day, it is usually good for a gap into the next session. You can see a couple of these instances here, right, where we have a 15-minute squeeze into the end of the day and a very large gap. 15-minute squeeze into the end of the day. The signal does not resolve inside the cash session that it's created in, and that compression allows for a gap higher into the next day. When I would set up trades off of these 15-minute squeezes, I usually had a general direction in mind. It's going higher or it's going lower, but I would struggle in knowing where to take profits. What really is my best target? I could use monetary targets if I wanted to capture a percentage gain, but is there any way I could be more precise in knowing where a stock might be going? As Dave and I are about to show you, yes, there is a way to bring more precision to your trading through the use of Voodoo lines. I show you these recent trade examples so you can see some of the transformations that I've made in my trading with the addition of Voodoo lines. The put credit spread is a fine way to express a bullish opinion, but what if I could create a butterfly that would offer better risk reward? this is one of the areas where this indicator really shines. And what I'll show you here in these trades before we go on into the kind of the X-ray vision of looking at Amazon is a couple of spreads that I constructed. You've got the entries and the exits both highlighted here on the right-hand side. And you can see how these trades were entered on November 4th, and then profits were taken on November the 5th. I initiated two different ways, through the sale of the put credit spread, which is kind of the basic way of expressing a bullish opinion, but then also through $100 wide broken wing butterfly. I never would have pursued something like, notice where I did the body of this at 33.65. I never would have come up with that type of a level for the body of my butterfly had I not seen these voodoo lines. With the voodoo lines now applied to the same 15-minute chart of Amazon, you can see very plainly how I came to the decision of using a short 33.65 call fly for the body of my spread. When Thursday's session opens, we gap higher as is the intention with the squeeze. But instead of feeling like I have to take profits right at the open, I get to wait about 45 minutes until price moves directly into this technical level, ultimately pausing just $1 higher than the suggested resistance. This level of accuracy has transformed my spread strategies, as we can review again in these two spread examples. But you can see what I'm showing you here, how previously this would be the 15-minute squeeze that I'd be focused on. I never would have projected such a precise level. Not only do we gap higher as the squeeze intends, but you rally on through the first 45 minutes of the session, coming within $1 in a $3,300 product. A lot of technical analysis that you do, you've got to be willing to give it a zone and to give it a certain margin of error. I feel like when you can come within $1 in a $3,300 product, that's a type of precision that cannot be ignored. So knowing that I had this squeeze and the voodoo line at 33.65, we can compare these two spreads, right? The put credit spread, which was my old way of thinking. In this case, I did the spread and I did it $40 wide. So selling the 3,200 and buying the 3,160 was risking almost $3,000. And I end up booking 854. Now, I'm not showing you the theoretical risk reward. I'm showing you the maximum risk when I initiated the trade. And then I'm showing you what I actually ended up booking, right? Because when we got into that level, I knew that was the target I was focused on. And that's where we wanted to take those spreads off. The broken wing butterfly with the body centered at the snow line was risking $1,700 and ended up actually booking $2,500. Not only are you making more money, but you're doing it with less risk on the table. I note here that it's a small but meaningful adjustment, but truth be told, it's one of the biggest adjustments that you can make in your trading to have less risk on the table in case the wheels fall off and the worst does happen. But then if you can get a pattern to play out in exactly the way you expect, you can see the drastic difference in the returns, and it's been a huge transformation in the way that I have been trading. So, these are just a few of the examples that I've been working. These all happened within the past 5 days on Amazon, and I've got more excellent trades to show you off of this analysis. But before we get into all of that, let's take a minute to get into the mind of the creator of this magic. I'll take a minute to introduce David Starr and some of the analysis that he puts behind these patterns and this indicator.
Hey, thanks, Henry, and thanks everyone for spending a little bit of time with us this evening. Henry, those were some great examples in Restoration Hardware and in Amazon. Folks, Henry is one of the many traders here at Simpler who depend on voodoo lines for support and resistance levels. And while the voodoo lines give some great opportunities for income trading and option spreads like Henry uses, they can fit into just about any trading style. As we start to look more at what voodoo lines are and how you can use them, ask yourself this: was 2020 a wild year for you? Would it have been calmer if you had a roadmap for the action? Let's try and recall what we've seen so far in this year that isn't even over yet, right? Right. We started the year right around here, right? We went up a little bit and came back down, tested that opening level for support, and then made what was at the time an all-time high here back in February before dropping sharply, right, into this low in March. And then what? Right back up to a new all-time high again here in September. Another sharp drop again, right? I mean, this was all over the place. In my book, pretty crazy. So what if I told you that all of these important levels in the S&P 500 could have been on your chart at the start of the year before any of these moves even happened? I mean, do you think you could have traded it even better? Because that's what the voodoo lines do. Put those levels on the chart before you even need them. So let's take a little, right? I put all these levels on here for a reason, right? Including this support here and this and this, and I deleted them before we went forward to the next slide. I wanted to leave them there so that you can see, right? There are voodoo lines at all of these important swings, right? So Henry's introduced you to some of the levels already, right? He's told you about the fire line. These are generally the most significant levels. And I'll tell you what I mean by most significant in a little bit, right? Then there are the green tree lines, like this one here at what was the all-time high at the time back in February, and down here, right, at this March low. Again, another tree line. Now, there are two more on the chart. And while there are more of them than the fire lines, there still aren't a whole lot of them, only 4 in this region of the chart, which is, thousands of points wide. Now, from there, the next most important are the white snow lines, which, right, they're the third most important levels. And again, there are more of these than the tree lines, but they're still important. You can see there's what was, again, a prior all-time high back here in September, right? And also the September low right at a snow line. You can see how the swings off of these snow lines, they're still pretty big moves, but often they're not going to be as significant swings as you might get from a tree line. What you can't see from the chart is that these levels have been here for years. And because they rarely change, we can know about them in advance and plan our trades around them. And once the voodoo lines are added to the chart, all of a sudden, they put the moves that we saw this year into context. Without them, it just looks like craziness. But with them, it looks like big but tradable moves, which we can take advantage of. And hey, if you're trading a move, you prefer that it's a big one. So I use the voodoo lines to help get short the S&P 500 for a good part of this February-March drop, and then use this tree line to help me decide to cover those shorts near the March low. Henry, you just heard him describe these levels as magic, and perhaps now you can see more of the reason why he and frankly a bunch of others kind of think that, and why they may get the name voodoo lines. Not only did they nail the swings that we've had here in 2020, right, but also right, back here, this sharp drop, right, late in 2018, the high at a snow line, the low at a tree line. So while they may look like magic, the voodoo lines are really just math combined with analytical techniques which I've developed. And we'll take a little deeper look at that as we do. This is an exact copy of a chart that I showed in a webinar just like this one from about a year ago. It showed an Elliott wave scenario where I anticipated a 5-wave decline into about 2200 or around that area. Again, here in the S&P 500. And then a move back up to new all-time highs. Now, if all of that sounds like confusing gobbledygook, stick with me for a minute. A 5-wave move is just one of several different Elliott wave patterns. In this case, I was looking for a move like this: 1, 2, 3, 4, 5. Now, we're not going to delve into all of those patterns now. One, because we don't really need them. And two, because as critics of Elliott wave are quick to point out, Elliott waves are complicated. Now, the other criticism that you'll hear all the time is that waves only work in hindsight. And you know what? Those Elliott wave critics, they're right. Elliott waves do only work in hindsight. Some elements of the scenario on this chart from a year ago, they were dead on accurate, but others were just completely wrong. And of course, we don't like trading with tools that are completely wrong, right? So what I like to do is take problems and turn them on their heads. Look at them from a new perspective, and all of a sudden you can make startling observations. And that's what the voodoo lines do. They take all of these problems with Elliott wave and they turn them around into a solution instead. A solution which, as you already saw from the previous slides, nailed all of the important turns that we've seen so far this year. And the way we do that, right, that is we take that well-known limitation about Elliott waves, that it only works in hindsight, and look at it from a different angle. Because if you pick that sentence apart, it's only the emphasis which makes it a negative. It only works in hindsight. I mean, if you hear that, it makes it so easy to dismiss the whole technique. It's so easy to miss the most important word in the sentence. It works. It works. It only works in hindsight, but that means it works. And how much time in trading do we spend researching and backtesting and trying to find strategies that work? So we've got something that works only in hindsight. So if we want to use Elliott wave to tell us about current price action, we just transform the problem into finding a way to take some of these things from years, sometimes decades ago, Elliott wave patterns that nobody argues about, right? And, and use them to project price levels into current time where, yes, after the fact, we'll know what patterns happened here. But it wasn't the pattern that was drawn here, again, taken from a year ago. This one was wrong, but the levels from the past in here were right. So again, that's what the voodoo lines do, right? They turn this problem on its head. take a tool that works in hindsight to take those hindsight observations and project them into current time. Right? So moving forward, right, you've already seen the results of this magic math, right? Here on the S&P 500, we've already talked about how we caught the top and the bottom here. And I've spliced in that scenario that I had from a year ago, exactly where it was on that chart, but I put it on top of what actually happened, right? So this is the one, this is what I've spliced in here, is that one where it anticipated a 5-wave drop in here before a move to a new all-time high. And we did get eventually that 5-wave drop. Price just needed to come up to this voodoo tree line first and then get a drop to the lower tree line right where we thought it might, 2200, and then turn back up to a new all-time high at the snow line. As we've also talked about, these levels have been here for years. But perhaps the best part about it is you don't need to know anything about that complicated Elliott wave stuff to use the voodoo lines. So if all the crazy numbers and letters on the chart are confusing, yeah, just ignore them, because for the rest of the presentation, they won't be here. We're just going to use the voodoo lines instead. I already mentioned earlier that I used this tree line down near 2200 to cover some S&P 500 shorts in March. And let me show you some more recent S&P 500 chart trades. And while we start walking through that, maybe you all can tell me a little bit more about what you like to trade. Do you trade futures? Do you trade options? Do you trade stocks? For all you options traders, are you looking more for directional moves or collecting premium? So see a lot of options only, a few futures, stocks only. And I appreciate you letting me focus on what you guys trade. And while you're typing that in, let's look at this September drop, still in the S&P 500, right? Now, this drop was just under 400 points. Still a big move, no doubt, but far from the thrashing early this year when the index lost more than 1,200 points. And when the swings are smaller like this, they can come from less significant voodoo lines. In this case, the move came down from a voodoo snow line and dropped into support at another voodoo snow line. I'd love to tell you that prices always turn right at the lines, but in reality, it doesn't always happen that way. This September high at 35.88 and 11 cents was 94 cents away from the snow line, just like that Amazon example you saw from Henry as well, right? Look, you will see those dead-on hits sometimes. But I also want you to see situations where it's not as precise. Look, because it's going to happen, and there's useful information in those moves too. On the daily chart, when we look at this move at the lower snow line, right, this was a dead-on hit first, right? First visit to the snow line. It bounced a little bit, and then 3 days later, we tested the snow line again, just getting a little wick, right, under that snow line. That's because it was just a quick move down that recovered. It bounced a little more, and then the next day, again, right to the snow line before turning back up. And for those of you who use the Ready Aim Fire, I love it as a trigger signal. For those of you who use it, you can probably also see we started transitioning to Ready and then Aim, and then we got a beautiful fire signal right at as it was holding that level. So, I mean, do you think that if you had a support level that you trusted like this and a clear buy signal like this one, that you could have made money buying the S&P 500 down here? I did this one in the futures, and I bought the ES right at this snow line. I gave it a little room to come back down before I got out, but still took over 200 points out of this trade in the ES. I didn't do it just off the daily. I used the 30-minute here as well to help me out. And again, this will help us see some of this sloppiness where one of these moves wasn't exactly to the snow line, even though this one was, right? Our first bounce, right? Then it came, here's the retest that spiked below a second time, right? And then the third time it came right to this level and then up, right? So do you think that you can find retest and hold patterns like this? Because it happens again and again with the voodoo lines, and it ends up being one of my favorite setups. Now, if you answered no, that's okay, right? Number one, it's only one of a few common behaviors that you see with the voodoo lines, and you spend a little time with the indicator and you will start to see these common patterns all over the place. And one of the reasons I pointed out wanted to point out these moves that aren't always exact is that's one of the things that I want you to be able to see to take best advantage out of this indicator. And one of the reasons why it comes with not only a PDF usage guide that has a lot of these patterns, but also several hours of recorded instruction that also includes some of the common patterns and setups that I like to use. And then Henry's going to tell you a little later tonight about the live trading that we've got planned for next week, where you guys can trade with the voodoo lines alongside Henry, Danielle, and myself, and again, get a head start on identifying these patterns yourselves. And once you see how price moves at these levels in live markets, again, you're going to see why so many of us here at Simpler Trading use the voodoo lines. Not just the S&P 500. You already saw Henry do things with a few stocks. I wanted to show you another example, a different variation of this test and hold pattern, right? So, so again, the September low was at a snow line here in Apple, but as it recovered, right, I didn't buy it at the snow line. It had nearby a fire line, which is, as you'll remember, one of, well, the most important of the voodoo line levels. And one of the things that you'll often see when price breaks above a level for a bullish move or below for a bearish move, you'll see a retest to show that it intends to hold that level. And that's what we got. We actually got some retests back here, back here, back here. All of them held. And this is another example of one of those retest and hold patterns that I just love to see, right? And so in this case, for you options traders, I bought some calls. Just a few days later, it ran into the snow line and stalled. I flipped those calls out. Just a couple of days, decent profit for a few days' work. And then here's another one, Weyerhaeuser. Right? This is not a stock that I watch all the time. Certainly not as closely as Apple, but I'm going to pay attention when I see a move dead to, I should draw my own indications more precisely, because boy, it was Weyerhaeuser precise in the hit of the fire line. Again, the most important levels, right? And another example of a beautiful ready aim fire buy this time right at a fire line. When I see something like this, I'm going to give it a try to buy it. And again, ran into the snow line, took a little over a week this time. It was about a 10% move, maybe a little over in the stock, and just flip out those calls again, and it's done. And I saw a few of you say that you like to sell premium, so I wanted to show you this as well. Back to the S&P 500 again, and I mean, you remember just a couple of weeks ago, right? The week before the election, this was falling apart again. We already knew about this snow line from these September lows, but it was racing towards it again. And for all of you who do sell premium, you know what was going on with volatility here. It was cranking up, and part of that was the election. Part of that was the market falling apart. And the question was, how far was this going to go? I know a lot of folks who are saying, I'm not doing anything ahead of the election. And I understand that. I was lightening up as well, but I wanted to sell some of that juicy volatility we were getting. And so, and so when I look at that, I already know that this is good support because it held before. And I know that below that, we have even stronger tree line support. That's the sort of thing that had me confident to come in, right? Get some credit on some put spreads, and look, it was right back up, and this was a trade we did live in the options gold room, and it expired worthless last week. So so just another example of yet another way to use that. So I saw one question, and I'm going to save most of the questions right towards the end. Henry has some more stuff that he's going to want to show you in just a minute. But one of the questions that I saw that I wanted to answer, do the levels always work? Does price always stop at them? No, because, if price always stopped, we never move, right? Tree lines are pretty important. If we could never get through a tree line, then price would never move, right? It would get trapped in here forever. But there are clues to the behavior, and that's why I want you guys to have all of those things that come with the voodoo lines, as well as the live trading that we're doing. I'm just going to go backwards for just a little bit, because a lot of times what we will see is when we go through is exactly this: retest from the other side, it holds, and then you get in, right? So so we can definitely talk about that more in a little bit. The one other thing that I want to talk about before we hand this back to Henry is that the voodoo lines will not work with charts unless they're for symbols which I've gone through and I've analyzed. So so if it's not a chart that's on the list that we've got, it won't work now, although I'm always looking to add symbols that you guys trade, that I trade, and constantly work to add them. And while the symbols are often stable for long periods of time, and the levels need to be updated occasionally and monitored constantly to see if they need an update. So I will post a link in the chat in just a minute, so that you can see what symbols these are on. And of course, I'll be around later for some Q&A after Henry wraps up. But for right now, I'm going to go ahead and throw this back to Henry.
Excellent. Thank you so much, David. And as I told you before, I kind of turn things over to David to get a feel for the way that he has implemented and uses these levels in his trading. We'd really been going over this Amazon chart quite a bit, and I think it's an excellent spot to continue the discussion. Picking up where we left off, the precision in Amazon can't go unnoticed. The first 15-minute end-of-day squeeze signal, the compression that fails to resolve in a given cash session, is the signal that we've been following to this point. After taking profits on those spreads, look at the signal that forms towards the end of the day. Right? So to this point, this was the 15-minute squeeze that I've been sharing with you. We took the butterfly and the put credit spreads into this voodoo snow line. What sets up towards the end of the day? Another 15-minute squeeze. This sets up an excellent short-term overbought signal and a perfect move to fill the gap during the very next session. So you can see now this second 15-minute squeeze. So, you spend the whole day kind of chopping against this resistance. And then as you get into the end of the day, you'll notice how momentum is rolling lower. It goes into form this same signal. I don't necessarily trade off of just the voodoo lines, but the 15-minute squeeze has been one of my favorite setups for the longest time. So also notice how not only does this help me get into a good bearish trade, but it also helps me avoid the trend continuation, because it's easy to say, okay, this 15-minute squeeze popped higher. So would we look for the same thing to happen from this squeeze? But knowing that you have this failure at the snow line and that this should be a major area of resistance, we know that we want to shift gears and then set this up to the short side. The oldest trade shown on this page is the butterfly we discussed a moment ago. This is how I'm showing you the whole list of everything that I've been trading in Amazon from when I began this campaign with this discussion, right? Going up into the snow line. And then once I closed out those, then we shift gears. A little bit later in the session, this is noted at 11:24. So it's almost about noon, midday. And I begin working this idea through selling call credit spreads. Into the end of the session, it's kind of rallying a little bit against me, but the resistance is still intact. So I'm able to sell another one for a $15 credit. The next morning, early weakness allows the spreads to be covered at 85% of the credit taken in. I would have never taken this bearish position had it not been for the voodoo lines. And as great as all of this has been, we are still not done. After covering our bearish positions on Friday, Amazon shares grind higher for the rest of the day. I hear being flat is the new spa treatment. I add that in as a little pun for myself, as John has mentioned that so rightly here lately. But just covering this is where Amazon dropped that next session. This is where it grinds higher into the end of the day. And you'll notice there was no squeeze off of this 15-minute chart. So I went into the weekend with no positions in Amazon. Waking up on Monday with no positions in this name allows me to take advantage of the dip and gives me an opportunity to show how the voodoo lines can help make up for a less than perfect trade. The perfect trade would have been to sell puts exactly at the fire line, but I'm not usually going to be that bold on a Monday morning. I'm going to look at the opening 15-minute range, and I'm going to try to play a move through the high above that bar, more of the close above the high of the low, if you're familiar with that concept. So do you see how you have a perfect rebound from the fire line? And as has, you saw this level in previous examples, the fire line had been there the whole time. And then do you see how on Monday, we open up, get this sharp selling, and you end up hitting it pretty much to the penny? Okay, well, here again, making up everything I've shown you to this point, I really do feel like is the most precise trading that I have ever done between the put credit spreads, the butterflies, and really getting them all synced up. That's the perfection that I'm searching for. In this case, it was a little bit less than perfect. We come off of that fire line, and I begin scaling into put credit spreads about 20 minutes after the cash open, after I've been able to see the 15-minute range, and I notice how well it held the fire line. Over the next 5 minutes, I build into 5 of these bullish spreads, looking for the gap fill, but also managing the spreads, looking for a percentage gain off of the initial credit taken in. So as you use the voodoo lines as your roadmap, you don't always have to say, okay, we have held the fire line and now we have to come back to the snow line. It can follow that type of a pattern, but just like you saw when we set up the short call spread, I was just working it to fill the gap. So now we're selling the put spreads, and I'm trying to see if we can just get up here to fill the gap. Considering the spreads are $100 wide, I don't want to be too lenient with them, and I enjoy thinking in thirds, which would suggest which would suggest that selling something at $30 and then buying it back at $20 is a good trade. So this is what I'm focused on after holding that voodoo line, the fire line that it touches just within ticks and then starts to rally off of it. Okay, this is where I'm selling those $100 wide put credit spreads. I end up averaging about a $30 credit on them. 1 hour into the cash session tends to be a reversal point, and when we fail to achieve the gap fill, I cover my remaining 2 spreads for gains closer to $5. I don't want to take a loss in this situation, and by averaging out of some of them at the 30% profit target, I lock in some gains at what ends up being the high of the day. So the bottom 5 here, you can see where all of these are time-stamped with the initiation of the sale of the put credit spread. In about, 20 minutes after the open is when I start. 5 minutes later, I've completed the position. Then 1 hour later, I'm out of all of it. My best exit was at $18, so you're locking in about $12 of profit. Amazon can be a great day trading vehicle, but I feel like you have to open up your spreads to let them breathe. A $5 wide is not going to yield these types of overnight gains, but if you can have these really excellent levels, you can open yourself up to a little bit more risk and do it, with a pretty sharp edge in your favor. So that's just showing you where it didn't do perfectly exactly what I wanted. It didn't get the snow line. It didn't even fill the gap. But by using percentage gains and by managing your winners, you lock in that trade that then rolled over into the end of that session. So, that was the move that you saw just up until today, when now it is below it. So to David's point, there will be times like now Amazon's below it and maybe not as attractive, but it still offers very precise opportunities if you're really dialed in to the exact level. Let me show you one more here that I think is really worth your time. And this is an example in Peloton. So let's begin with the simple hunch that Peloton is going higher. I'm going to say that an asset that's been outperforming over the past 3 weeks will continue to outperform over the next 3 weeks. This is just a very basic assumption to show you how I might lay levels on a chart. With this bullish assumption, I apply my typical Fibonacci analysis, and I have 4 targets that I'll consider. It's an awfully broad range. It requires a certain amount of speculation, right, as there are other swing highs and swing lows that I could use, and it is a manual process. Also, when you draw these types of voodoo lines, when you draw these types of fib extensions rather, they don't carry the importance of the voodoo lines because they're all, what would your probabilities be? Well, the first one is the highest probability, and the furthest one away is the lowest probability, just like any basic price movement. But then when I lay my X-ray vision on it, when I apply the voodoo lines, I suddenly have a roadmap for this bullish assumption. I can see that there is a primary objective of 125.03. Right? This is when you start saying like, wow, there's kind of a lot of lines on there, and you can narrow it down. If you don't want to look at the more precise levels, like say you're not going to day trade, well, then you can get those out of the way, as I've shown in those previous Amazon examples. But the important part of it is just knowing this is our big picture target, right? That's how we had that big trade in Lulu, is by knowing that in time, that is where we should be headed. I can also see that there are 5 secondary objectives and several tertiary targets along the way. So Fireline is primary. That's where we want to focus, and that's our big picture target. Then the tree lines and snow lines will have a little less significance, but still quite important. And then you weigh these degrees of significance. When I get to that fire line, I'm going to unload everything kind of thinking. When you make the smaller targets along the way, they're more incremental and allow you to maybe, scale out a bit more slowly. Skipped a slide there. But continuing on with this roadmap applied, and with now having these degrees of targets that I can focus on, I then look for signals suggesting a direction suggesting that a directional move may be ready to happen. The squeeze is my favorite, and the complement of the ready, aim, fire, buy signal is also helpful in this instance. Do you notice repetition in what I'm doing? Do you notice a pattern in the way that I'm putting this analysis to work? It's all stemming off these 15-minute squeezes. Now, this is not the only way you can use the levels. There's a near infinite number of ways to use this work. But do you see how we come into the end of the day? Do you see we have the same signal that we've been looking at over and over and over? So we just set this one up in exactly the same way. There are several ways to trade this, but since the 15-minute squeeze was setting up on not just an end of day, but a Thursday end of day, this Thursday afternoon, so I have the opportunity to sell an option that has 1 day of life left. This is a very binary situation, but I have also found it to be very high probability. I set up a trade selling 70 naked puts and 20 as spreads. I note this only for you just to show you another example where here in this Tasty account, having almost 100 short puts is about as big as I will usually trade something. And I do that with this level of conviction because after working with these levels for so long, you start to really get a good feel for how they're going to work. So I set up all of this naked premium. Sometimes I enjoy doing this I feel like I get a little bit of it from John, hopefully, just like entertainment kind of trades. It's like there's 21, 20, 19, 18, 17. So you average yourself into, what is that, like 95 short options. And then I'm going to use back of the envelope math or theoretical pricing to come up with my profit targets. The end of the day, after taking these entries, the market is closed and I begin setting up limit orders wanting to take profits. I knew that this day, just the way my schedule had happened to work out, I wasn't going to be present for the cash open. So I thought, perfect. I've got my end of day 15-minute squeeze. I've got my limit orders in place to buy these back right at the open. Everything looks great. And I, go to bed just waiting to cash in the next day. The next day, Trump is diagnosed with COVID. And I'm sitting there thinking, oh my gosh, like of all the days for me to be away from my computer and have this big naked position on. However, Peloton gaps down slightly, but immediately finds its footing, promptly progressing to the voodoo tree line, and my orders fill within the first 50 minutes of trade. So you can see this very volatile bar, right? Here is our 15-minute squeeze that I did, and that's the whole setup I did was off this squeeze into the end of the day, looking for my overhead tree line. Instead, I get this very volatile open, right? Look at that bar. You have a huge range in Peloton out of the opening few minutes, but ultimately the 15-minute squeeze finds the strength that it was supposed to because we're focused on this as the trend following continuation type trade. The at-the-money options are crushed the hardest, and those orders fill first. The further out of the money options were the ones that I was trying to buy back closer to worthless, and you can see that those do fill about 45 minutes into the cash session. So it's really just a repetition here for me where these have been, like Lulu, that was a month-long trade and can be very helpful for swing traders that are looking to position trade. All of the other examples were basically overnight trades just because that's some of the most lucrative opportunity I have found here lately. When the market gets back into a better trending dynamic, well, then we'll be setting up more trades like Lulu, where we'll be in them for a month or maybe, 45 days. But when you need to be a little bit more swift, between the precision and Amazon, the precision and Peloton, you can see the edge that this analysis brings to your trading. So I am very fortunate to get to learn from David and to apply this and to share it with you guys. These are the voodoo lines. You can see how they have helped us predict these areas of support and resistance. We do have an offering that I wanted to make sure that you're aware of. I'll get this shared here real quick into the presenter's posts. But if this is something that you are interested in, you should be able to sign up through that link. Let me try it one more time. I may have to type it out. There we go. You had the little HTTPS in front of it, and it will allow it to be a clickable link. So I'll save you the work of having to type it in by putting it up there in the presenter's post, and I'll also put it down here just into the general chat. But you should be able to click on that if you would like to look at what David, Danielle, and myself are going to be doing here in the coming weeks. We have 2 packages, of one of which is going to be the futures. It will include the Voodoo Line Indicator, the Voodoo Line Strategy class recordings. So these are some of the past work that David has done where you can go through at your own pace and review more of live analysis that he's done with this work and the trades that he takes off of them. It will also include the 2 days of live trading. So the only variable that you have to decide on is whether or not you would like to receive the stock-based updates. I know 100% that they are worth it, and I know that because I have situations like Pinterest, where Pinterest was not a name that had voodoo lines, but as it started its ascent from 20 to 30, I ran it by David and I said, hey, this is kind of a hot name. Do you think you can put some voodoo lines behind it? Well, he was like, yeah, sure. Give me, a day or whatever it was. And then he came back to me with some of the best levels that I've seen. So it's more of the same thinking. If we come back and we'll look at it here off of the daily chart, when he gave me these voodoo lines, it was a little bit further back here in time, but you see this same way of thinking that's kind of like Restoration Hardware, where I've got my squeeze and I'm eager and I'm excited to buy it. But knowing that we're at a fire line, I may have to spend some time consolidating. I am willing to weather that storm and to be patient through the consolidation because I know the next major target is up there at the fire line. Yes, there are, multiple levels on here, and there'll be a couple decisions to make along the way. But if you just use that foundation of saying from fire line to fire line is an important roadmap, do you see how when Peloton gaps into that level, how long it takes to digest it? They won't always hit to the penny, but you've got to remember, what we're trying to do in this, and to be, this precise, you can make some good money in trading by not being to the penny, and this is almost to the penny in several situations. So that is just one reason why I would tell you that if you're going to pursue this, you should probably go ahead and pursue it through, and use all of the tools that are available to you. And having the updates, to me, all you need is one good trade to pay for these. And I think that you will really find them to be, an excellent tool in your tool chest. So, those are the 2 options as you look to sign up. If you have additional questions, the office is also there to answer and support you. There's a little bit more of a summary here, just showing you how the Voodoo Lines was developed by David Starr to uncover hidden levels of support and resistance, which might not be otherwise visible. Pretty much every trader on our team uses these levels. And then this will be the dates for our live trading. So the 3 of us will be with you through these 4 sessions. They're not all day, but they are, decent chunks of a active market session. And there's nothing better than studying this kind of work and then seeing it being put to use in a real live market. Wanted to note that we do take PayPal these days. So if that's something that you're interested in, that payment method is available to you. And then just a review of the 2 packages. So thanks for the feedback, Sean. I know I speak for everybody here, and I am with you. I feel there again, I'm just the messenger. Like I just happen to be the guy that fell into this spot that is learning all of this analysis and applying it the best way I can. The work that David does to create these is mind-boggling. And I also feel like, I'm not trying to invent the light bulb. I'm just trying to light the house. Like he's invented the light bulb, and then I go to work with what he has already accomplished. And it's really been it's made for an excellent 2020. Thanks, B. Good to see you. Hope you have an excellent evening. Let's see. Sean says, I'll admit that the stuff I've learned from these webinars, mastering the trade, has made a ton. I made about 300K in the last 4 months. Isn't it crazy the kind of money that is in trading? And it's a very humbling experience. You can have obviously significantly down weeks too, but if you work on your discipline and you work on implementing a plan as opposed to just trying to bootleg off of trades, there is that type of success that is available to anyone that wants it. So I appreciate you making the comment. Thank you, Matt. I appreciate your feedback. Thank you for sharing a little bit of your Tuesday evening with us. Just kind of thumbing through a few questions here, seeing if there's anything else that may be a recurring theme. And then why is there a monthly subscription required for the stocks? Because of the updates. So there again, David puts a lot of manual work into these, right? It's not something that can be calculated completely just off of an algorithm. There has to be a little bit of manual labor put into this, probably a lot of manual labor, truth be told. And then when there's a new issue that comes out, or, just recently, how many products have made new lifetime highs? As these patterns progress further and further in time, there will be some recalculation that may be needed. But like anything, if you don't find the updates helpful, there is no, you're not locked into a deal. You can cancel the $47 a month, but like any indicator that you add, you're not going to put this on your charts and just be blindingly wealthy off of it tomorrow. You're going to have to give it a little bit of time to study it and spend some time looking at it. If it looks like there's a lot up there, maybe it takes a minute to spend some time with. But you saw every trade that I shared with you is all real money, right? It's all my real own personal money. And I wouldn't be able to trade it with that conviction if I didn't have this analysis. And then do the voodoo lines work on a 1-minute chart? Absolutely. This is one of those things that I don't do a lot of 1-minute charts, right? Because I didn't get into trading to be trading 1-minute charts. I feel like they're a little small for my taste. I'm going to show you some of this. Like say we look at Apple and we want to look at a 1-minute chart. There is another part of the voodoo lines that is geared exactly for those of you that would prefer the shorter time frame approach. I've got it hidden on those really small time frames, but you can kind of see them here. Do you see how you now have so many additional levels? It gets a little bit through it here, but ultimately that's a zone to hold. Kind of the same inverse down here. So I enjoy using the bigger setups, right? Stuff off of daily 130-minute charts and then trying to finesse my butterflies and my verticals. I feel like that's where I thrive. But if you want to focus on 1-3-minute charts, it's one of the best indicators out there. And then have you created a scan for the voodoo lines? I don't know about the combining it with the ready aim fire. That's an interesting way of thinking. I know that David has done a lot of work getting the scanner incorporated with that. But those minor levels will really be great for those of you day trading. And then let's see, what else can I comment on here? When are the live trading days? So I can go back to that slide if you'd like to take a look. Trading day 1 is going to be November 17th. And then trading day 2 is going to be the 19th. If you can attend live, I do think that's generally where you'll get the best benefit because of the live interaction. If you're not able to participate, everything is recorded and will be sent to you. And all of us are, as responsive as we can be through email. I answer it the same way that John does, where if you send a novel, I'm probably not going to be able to be as responsive. But if you're like, hey, I got a few questions, I need this and that, we're definitely here to help. How many stocks are in the subscription, and is there a list of the included? David could probably tell you the number off the top of his head. It's a very healthy list. I've got it up here in Thinkorswim. Actually, I say that. I just toggled off of it a bit ago.
Yeah, I think it's about 260 now, something like that. But I did post that link a few times.
Awesome. Thank you, David.
Hey Henry, could you bring up a daily chart of Amazon real quickly that we could look at for a few of these questions? And what I want to show you guys, there were a few questions that came in, just sort of asking as far as some of Henry's trades when he was looking at the squeeze, and maybe zoom out just a little bit, Henry. A year or maybe even 2 is probably probably good. Yeah, this is a good amount of data. What I want to focus on here is, for folks who are asking about direction. And I don't want to go too deep into this in the webinar. This is part of that, included videos to look at this. But if you look at this, can you see how the low on that chart is right at a tree line, and then it works its way up to the fire line, and then goes sort of right up to the next tree line, retests then a snow line below that, kind of up, and finally works its way through that higher tree line and right up to the next one, falls back to a snow line, and then above the next tree line. You see how it moves sort of very methodically from level to level to level. And there's a way that these things move when they trend. And there's a way that they move when it transitions to chop, which is sort of what we're starting to see now with the way it's oscillating around the fire line. So there are ways that you can use this that are more complex than we can really talk about in a brief webinar, but which you'll start to see when you see the indicator. And that's part of, among other things, part of how Henry gets a handle on the direction, right? If it's working its way from support level to support level to support level, right, then yeah, when it runs into a level for resistance, you think it's likely a temporary pausing spot and not necessarily, right, the end of a move. And you can learn to assess those things from the indicator as well. It's not as obvious and takes a while to explain. And it's really easy to see, how you can run right to a level and pause, and how that happens all the time. So while we may focus on some of the, hey, see how it ran right to a level in the webinars, and also because that happens a lot, there's a lot more nuance in this indicator that we'll spend some time helping you to get a feel for.
Excellent. Thank you so much, David. I'll spend a few more minutes here seeing if there's any, like I said, kind of recurring questions. Try to get to the common ones as best I can. But the side-by-side audio seems to be working really well. Well, it is definitely there, Stephen. We all have to kind of take it at our own pace, but have those goals out there for yourself. And, I think in time and with the right amount of dedication and perseverance, you will get there. Seems you could use the lines for iron condors. You can use them for anything you'd like to sell premium against. So be it iron condors or like I did with butterflies. Butterflies are another type of short vol trade. So yeah, anything that you need precision in your levels for. And then would we have a session install for the indicator? I don't know if there is a installation session or not. If you have ever installed anything for Thinkorswim, it is very similar. And, as you ask, if one of the sessions we got started with, if I needed to spend a little bit of time on that, I wouldn't mind, but we'll see how many questions of that sort we end up getting. And then I'm still a bit confused about the futures versus the stock version. It's mainly just if you want updates going forward. If you'd like just to pay the one-time fee and have these, I would venture a guess, and I don't know if, it's a really rough thing to say, but they'd be good for 6 months probably with no updates whatsoever. I mean, you could use them, but as swings would start to get, as price expands over time, 2 years from now, they wouldn't be as relevant. So what is the strongest voodoo line? That is the fire line without a doubt. I'll show you again. This was one of my best trades of 2020, but it was knowing well ahead of time that Lulu was very likely to go to this fire line. And you can answer so many of these questions and kind of, with the same answer. The voodoo line of the fire line is going to be the most important. And do you see how in the past, if I was using the squeeze and I was thinking about my targets, the targets would be this swing high against this swing low, and then I would look for my 1272 extension, right? You can see how that basic Fibonacci principle would complement this tree line, and that's probably where I would have been done with the trade. But I would have missed out on all the fun. That would have been your standard basic little swing trade, but by holding those Delta 70 options that then go to a Delta 1, and then you catch the move from 65 to 90, that's where it really pays you. And this is, you've heard John say that comment, I think from Paul Tudor Jones, where there's no training for catching the final third of a move. And I feel like it's almost my mission in life, maybe David's, and my job to echo the sentiment. But is that not training for the final third of that move? And then, and I don't do this, but for those of you that are contrarian, maybe you give it a shot to the short side. Try selling that fire line, and that ends up giving you 115 points over the course of 2 weeks. You can see how this is, can be such a major inflection point. We do not have any intentions of doing this again in the future. We usually try to put everything we've got into these presentations. We kind of give it everything that we know to speak to and the best promotion that I think we can offer, and then we won't do it again for the foreseeable future. The updates come out, what would you say, David? I mean, sometimes it's once a month.
So it is roughly once a month. So there was a month earlier this year when I had 3 updates, but I try not to do that. Now, that was a month where we had markets going crazy. We had splits in Tesla and Apple, which everyone was trading, and I wanted to get the new voodoo line levels out. Obviously with stock splits, you need split adjusted voodoo line levels, and we made sure to have those out on the day of the split so folks could trade them. So, but it's usually once a month. So, right now, TTD, I know we have a bunch of voodoo line users in here right now. And if you trade TTD, that needs new levels. I'm not going to rush out an update for just TTD, but if it's Apple, if it's Tesla, if it's something else, or if a lot of things needed, it's usually once a month. So RM is asking if it's just stocks or the futures updated as well. The futures and the futures really includes it includes futures, it includes indices, it includes index ETFs, it includes some Forex pairs, and they're all in that symbol list if you want to check it. Those don't need to be updated as often, right? Some stocks can have wilder moves than the indices, and there are just a lot more of them. And so the stock updates are more frequent, and it requires a lot more monitoring and maintenance. So that's why there's a subscription related to it. It pays for my time to get that done, because usually about half my day is just monitoring and making sure those are good. But the futures pack, yes, it gets updated whenever it needs it. So there was an update to the futures in October. It was the first one that we had in probably about a year, or certainly in many, many months. But that needed update to the Dow Transports and the NASDAQ Composite. So when it needs it, it also gets it. David L. is asking, will the lines ever make it to TradingView? And what I can tell you is, if you're interested in TradingView, just drop a note to support. They'll be able to tally how many people are interested, and that'll help it get on the priority list. Wisconsin in Dairyland is asking if we've got the grains. We do indeed. And again, if you've got a question, just look up to that alert section above the chat. Oops, and I didn't post that that link to. So there is a link up in the alert section to what symbols, and you can check that out.
I always love that when you can look at it kind of briefly. I don't spend a lot of time with the grains, but you take a quick look at corn, look where it's headed. The fire line is up there at 437. You're trading 426. That on the back of a daily squeeze, that looks like a pretty textbook setup to me, or at least an area to be aware of as you approach it. Well, and I don't have ready aim fire on this particular chart, Brett. Remember, one of my favorite things about trading, and as you learn to trade, it's like finding a book that you love. You're going to go and you're going to find more books from that same author. So David is the creator of all of this awesome technical work that I use. The ready aim fire is, I've got a couple charts up, right? Here is the thing that I'm looking at all day, every day. But that's a little, like any technical analysis, what you learn builds on other analysis. But you don't need all that to be successful. This right here is your basic foundation. And this is what I like showing you, why I'm telling you, I'm such a devoted student of the squeeze. I've studied it ever since I met John. Well, here's where we're taking the squeeze, running it into voodoo lines, taking the squeeze, running it into voodoo lines. And that's why you may see, certain things on certain charts. So I believe that mostly summarizes everything that we were wanting to bring to you guys. I hope that you can see the edge that it really can bring to your trading. I'll say again that it has helped me make some of the best trades of my life in 2020. And as I move into 2021, I know that it will be a foundation of everything that I am structuring. So thank you again, David, for putting all of this work out there and making it available to us. I am a direct beneficiary of that, and I hope that you guys piggyback off of it as well. So there again, that link is simplertrading.com/predict. Or you can call us at the office at 512-266-8659. And I sure hope to see you guys on the live trading. So unless David has anything else, I will plan on signing off and wrapping things up. You guys have a great rest of your evening.
I will just go ahead and echo Henry's appreciation for you all spending a little bit of time with us. I hope I see you all again sometime soon, whether that's at the live trading in some of our trading rooms or wherever it is. It's always a pleasure for me, and really thank you for spending a little bit of time with us.
All right. We all have a great evening, and I hope to see you in the live trading. We'll talk to you soon.